What's up, y'all? So we're back with another video, and today I really just want to talk about Forex versus futures, right? And I think there's a lot of things that had developed over the past year, with especially the changes in the industry and some of the smackdown, right? And so I think some people, hey, they're living in their respective areas. Some people have converted over from Forex to futures. And some people I think are still trying to figure out what their plan is, right? So I thought it would be nice to just kind of talk about both of these markets and what works for you, right? And I think it's, there's a few things that really impact which route that you should go or lean towards. And so I just wanted to do a quick video on this because I think that it may help some people, right? I mean, to some of you, this really doesn't matter to you one way or another. You've already got it figured out. But for those that are still trying to decide what lane they want to live in, I think this video can be very valuable to you. So let's go ahead and get right into it. As like I always tell you, I know I can talk, and I want to try to keep this video a little bit shorter. So let's see. All right, so I think the first thing I want to talk about is, what is Forex? And I put something together because I thought it'd be a lot easier to discuss this, right? So essentially, Forex in its smallest form really is just trading currency pairs, right? It's trading currency pairs. So it is the foreign exchange market. And I think for people that maybe are new to trading, you think about it as you are traveling to another country, right? And then you have to, let's say that you need to use their currency. What is that exchange rate, right? That's really how you can think about it. If you go into the airport, they have counters where you can go and exchange your money right there. You're participating in the market, guys. You're participating in the market. So it is trading currency pairs. But the reality is that you can do a lot more than just trading currency pairs, right? So let's kind of break it down. So what are some of the instruments that you can participate in over here, right? So the currency pairs, and these are just examples, right? This is not everything. This is not a comprehensive list. So things like GBP USD, USD JPY, GBP JPY, USD peso, all these different things, right? Those are the most common, and this is true Forex, right? But you also have other things that you can trade there, like metals, which is gold alone. A lot of people trade gold. Indices, a lot of people trade indices such as US 30, NAS 100, SP 500. But the important thing to remember about this, and also with commodities, oil, grain, corn, the important thing to remember about this is when you're trading things like indices on a Forex side, you're really trading CFDs. And what CFD means is contract for difference, right? And so essentially you are trading a mirror market of the stock market, right? So you're not actually participating in that market. And so for somebody that is a US citizen, technically you're not supposed to trade CFDs. So I think that's the first thing that I'm going to point out before we even go any further, is that if you're on the Forex side and you're trading an index, essentially you're really participating in an illegal activity as a US citizen, because U.S. citizens are not supposed to trade CFDs. And that's why you've seen everything that's happened in the market lately with all these brokers that had MetaTrader and they got their licenses pulled and all these other things. Because really, although the U.S. would say that they're protecting us, right? That's why they have all these regulations and things. They're protecting us. However, there's still ways to do this type of trading, right? And the reality is that people are going to put the money out there regardless. They don't care. But if you go and you look at some of these brokers, right, like Oanda, for example, let's pull them up and take a look. I don't trade with them, but I have looked at them in the past. Okay. So let's pull them up. So if you go on here, you go to any of these sites and you can figure out, what instruments they have available. But the first thing I want to do is kind of scroll down here to the bottom. If you go to any of these broker sites, right, you can come down here and you can find out quickly, where they're located. You see this New York, you can find out what what their regulations are and so on and so forth. And so I think it's very important for you to go and figure out those things, so you understand what your rights are and what your protections are. So what I want to do is, let's go over to the instruments. And you'll see they're here talking about Forex pairs, right? And cryptocurrencies. I didn't put that one down, but yes, you could trade cryptocurrencies on, in a Forex market. What you don't see in this list, right? Forex pairs, cryptocurrencies. What you don't see in this list is index funds, right? Because this is a regulated broker. So they're abiding by the laws of the US. And so therefore, essentially, they're not going to allow you to trade US 30 here. But on the other side, we have platforms like Hugo's Way, Sway Markets, Hakel Trade, and there's a ton of others. But there's a lot of brokers that are not regulated with the US that have essentially gotten rid of, or they no longer allow US clients, right? But and they don't allow US clients because they're going to continue to offer things, like these indices. And guess what? You're not allowed to trade them. So it's easier for us just to keep you off our platform. So I'm going to pull them up. So here's Hugo's Way, right? So you can come over here, you can create an account, you can load it up with crypto, right? And you can withdraw money out here. You never have to KYC, right? So this broker is not regulated. Do you see any details here? Right? And then you even read this down here, this asterisk, and hopefully you can read it. But it says, this website provides services and information on this site that are not aimed at citizens and or residents of the USA. So technically you're not supposed to use this, right? But the reality is you can go on here and you could really put in any name you want to. They don't care. They're going to take your money. And so for me personally, it's to a point of, do I want to operate with something that I have to question whether I'm going to get my money out or not, right? Because there's no regulation there. They can run off with your money if they like. But anyway, we're not going to get caught up in the whole brokers thing. The reality is, that's what Forex is, right? Now, some of the advantages, market hours, you could trade this 24/5. For the crypto, you could trade 24/7 though. High liquidity, the leverage, good leverage. Of course, if you're trading on regulated, like you can go up to, I think 50 is, 50 to 1 for the leverage. But if you're on one of these unregulated brokers, usually you see like 500 to 1. I've seen higher than that, but that's the typical is 500. Right. So that's Forex. So now let's go and talk about futures. So futures, essentially you are trading an asset's future value, right? Trading assets future value. You'll see that the instruments essentially are the same. But it's not typical that you'll see people trading Forex really on the future side, right? But you will see them trading indices, metals, other commodities, things of that sort. Here are some of the common brokers. I use NinjaTrader, but here are some of the common brokers, and the advantages are essentially the same. So you see a lot of common things here, right? And if you come over here to bar chart, right, you can quickly see. So these are all like the instruments that you'll find on the future side. Now let me make a point to you. So I'm going to click on this. Let's click on grains, right? Because what are we talking about when we talk about futures? So essentially, when I buy a contract, looks like my stuff. Hold on a second. Let me let this load back up. All right. So the point I want to make to you is what's happening in real life, for somebody that is dealing in a futures market. And I'm not talking about the average day trader. I'm talking about like, just the real live, like what's going on with futures, right? So let's say corn. So one contract is 5,000 bushels, right? So essentially, when there is, the contract is just like it is in your regular day terms, right? It's an agreement between two parties. And so let's say that a farmer has corn, and they know that the price of the corn is going to go down, right? So that value is going to go down. But I want to make sure that I will be able to get today's value. So you lock up a contract that, hey, I'm going to deliver this many bushels, right, to you at a date in the future at this agreed upon price, right? So even if the market goes down, right, I still am going to make today's value that I agreed on with you. That's essentially what's happening. And so for a day trader, like, you got to think about this. This is a point value, right? So think about how much leverage you're getting just in here at day trading. Let's look at the indices. So I trade YM, and when you look at it, it says $5 times index, right? Think about how much you're actually buying of this contract, right? At the end of the day, you only make the difference. But essentially, somebody is giving you the opportunity to participate in these markets at extremely low rates. You have very little skin in the game. So this is a site bar chart. If you want, you can go out there and you can kind of look at the different markets and kind of figure out what their point values are, because everything is very different, right? So this is definitely a good reference for you. But let's go back. So that's really just an intro to what futures is, in really its simplest form, right? So what you want to know, and I want to get to this point because this video is starting to get a little bit longer, is what should I do? Should I be on the Forex side? Should I be on the future side? So things that you have to consider, right, is one, how do you trade, right? All of this stuff is dependent on you and how you trade. The two things that are most important are how you trade and what you trade. So why is how you trade? Why is that important? Well, one very important thing is, in the futures market, you got to have a substantial amount of money in an account to hold a trade overnight. So if you're a swing trader, futures just doesn't make sense for you, because unless you have a ton of money, you're not going to be able to hold that trade. So essentially, there is no swinging for you over in the futures market. All right, so you need to be intraday scalp, because you're going to have to close all your positions at the end of the day. If not, you really risk losing your capital and potentially owing money, right? The next thing is, what do you trade? So if you are a Forex trader, if you simply trade currency pairs, I highly recommend you just stick on the Forex side. And I also recommend you go with a regulated broker. I mean, if you want higher leverage, fine, go use somebody that's unregulated. But just realize that there are some risks there. And I mean, I know there's a lot of people that have no issues with it, but there is a risk, right? So if you purely trade currency pairs, just go with Forex. You're going to be able to hold your positions overnight. You're going to be able to trade any way you want to, whether that's swing, intraday scalping, whatever it is, right? But of course, when you hold futures trades overnight, you're responsible for swap fees. Although there are positive swap fees that you can incur, which is great, right? But essentially, you will incur swap fees, but you can hold those trades. So from a Forex perspective, trading currency pairs, stick on the Forex side. If you are a person that trades, an index fund, a metal, or any other commodity for that matter, right? I highly recommend that you just trade on the future side. The only way that I would say stick on the future side is if you're a swing trader. If you're a swing trader, stick over there and find something that, find something that works for you. Of course, if you're going to trade an index, you're going to have to go with the unregulated broker. That's your only option. But I would definitely say if you're not trading currency pairs and you're not a swing trader, just go on the future side. The next thing is, do you want to be a prop firm trader, right? I think the end goal for us all, right, is to trade our own funds, have our own account, because when you have your own account, uh, you're not restricted by all the rules of a prop firm, right? There are rules, of course, but you don't have all these rules about how you can withdraw and what's acceptable and all these other things, right? You don't have those requirements. You don't have minimum trading days. However, what you do have is an opportunity to have capital that you might not have had. Now, I will say, if you're going to do the prop firm route, make sure that you do have a strategy that is firm and ready to go, because you're still going to be spending money regardless of whether you do a prop firm or you do your own personal account. But the thing that I want to point out here in the case of futures versus Forex is futures prop firms, they have a lot longer and stronger track record. So the futures prop firms, they're really more attractive. They're really more reasonable. I have dealt with Forex prop firms, and I got to tell you, my experiences haven't been great, and I'm not going to drop any of the names of those prop firms that I had issues with, but essentially they will find any reason to deny your withdrawals. Like when it's time to withdraw, I actually had one that said, "Oh, we're not going to approve your withdrawal because you are copy trading." And I'm like, there's no way I was copy trading. I don't follow any traders. I don't take signals. I wasn't even copying my own trade. So there's no way. But when they don't want to pay you, they will find whatever reason they can to not pay you. So from my experience, the future side is better because there's that regulation piece that comes into play, right? For example, on the one on the Forex side, they didn't require any of my information, right? Like, yeah, I was signing a contract with them, but the contract really, it had no legal details about me. On the future side, you got legal details, like you're a true independent contractor with these firms, right? So I would say if you want to be a prop firm trader and you are able to be on the future side, I would say go at the future side, because the prop firms are definitely more attractive to me. But yeah, so I think those are just some of the things that you should think about when you're deciding between Forex and futures. And of course, there's no wrong or right answer. You can do both if you like. You just really need to do what fits you best. And so I hope that answered some of the questions that you may have, or even got you to think about some things that you may not have thought about. But go ahead, if you have any questions or comments, or let me know what you think about this. Drop it down in the comments, and I will see you all in the next video.